Shares of Robinhood and Virtu Financial are ticking higher after the U.S. Securities and Exchange Commission, according to Bloomberg, is going to stop short of banning payment for order flow. It's a big victory for brokerages that get paid for processing rights. And just a little mini Yahoo U, if you will, and a reminder of what payment for order flow is. Effectively, it used to be you had to pay for trades.
Yes.
Remember those days? Yes, you had to pay for trades at one point in time, but now you mostly don't anymore if you're a retail investor. The cost of that, though, is, because nothing in life is free, is that sort of bulk trades, or then the order flow, if you will, is routed through certain big exchanges that then make money on that. Companies like Citadel, for example. So that's how the cost is transmitted.
Right.
And there was talk of maybe making that illegal, because it meant potentially that people weren't getting the best price on their trades.
Because it would just go to the highest bidder for that actual order flow instead of actually getting the trader, the investor, the best price execution.
Yes.
And so with that in mind, we were tracking shares of Robinhood. Of course, this had really come to light, especially after the Reddit trading frenzy that ensued at the top of 2021, and some of the run on and the subsequent halt in specific names. And so with that in mind, we've been tracking shares of Robinhood. They are holding on to those gains right now. Virtu, also another one that we're keeping a close eye on. And it really kind of kicked off this wave of regulatory looking under the hood, if you will, for what had been allowed to go on for so long, whether that was payment for order flow unchecked at least, or even some of the clearing, T+2. That was something that had gotten a lot more attention from the regulatory clearinghouses, but then additionally from retail investors just wanting better time to clear so that they're not stuck waiting for the actual trades to be executed at the end of the day and to get and to capitalize on the best price, which would be the case if you were in a high volatility era, especially if you were seeing prices fall to the downside too.
Yeah, so SEC Chair Gary Gensler had signaled that they would be examining this issue of payment for order flow.
Yeah.
There was a lot of talk about it, a lot of complaints on the part of the meme stock traders about the likes of Citadel Securities, what was their interest, But all of that now seemingly coming to nothing.
Yeah.
So it's interesting that there was this sort of overhang on the likes of Robinhood and the others that now seemingly is being removed. And who knows what, if anything, I mean, will the SEC come out and comment on this process?
Right.
We don't even know if that's going to end up happening. But we're going to continue to watch this situation because it is an important one for retail investors.